Paul, thank you very much. Very thorough. I appreciate that. Um, Questions here from the audience. Could you walk us through how the pilot programs work? I'm trying to better understand how and when these pilots could start to translate into revenue and how meaningful that revenue could be.
Yeah, sure. So, very top level, a pilot typically happens. I'll take a couple that are ongoing right now. We literally reach out to the clinic. We present to them cardio yield. They do a bit of a double click down on max yield, cardio yield, the Holter report, what's possible. They look at some of our materials. And generally speaking, within 2 or 3 meetings, they're asking us about pricing. And so oftentimes we'll put a small amount of price in place, mostly to help with early licensing, but you can't use cardio yield until it's regulated as part of the reimbursement model here in Canada or in the States where they want to charge. I mean, you can in certain instances, it's a bit complicated and we don't really want to get into that. What I'd rather do is put the pilot in for relatively low money with the assumption that once we have cleared regulatory, be it FDA or Health Canada, we would then up-res the price point to anything that is either current in the market or our new price point. So this could be a per seat, call it $2,500 US per seat per clinic, could be $15 per ECG. There'll be a multiple of ways for us to do that. Each clinic, I don't want to say is unique, but volume within the clinic has a large degree of how we would work on it.
You touched on it somewhat, but how does the reimbursement model work in the US for Medicare, Medicaid once regulated? How would people buy and pay for it? Does it get like a CPT code and
Yeah,
and
it's all that.
and
Yeah.
and how does that work?
Yeah. So, I mean, if we're talking in the US specifically, there'll be a referring physician. You'll literally go to a clinic. You'll be hooked up with some form of a Holter, likely 3 lead. You'll go away, you wear it. In the US, there's a couple of ways. You could do Medicaid, insurance, or frankly, depending on the price point, you see a lot of this in the US where it's direct to consumer. In other words, they're paying cash out of their pocket for the Holter report. Could be 250, could be $400. So what we do is we work with the clinics, and we're literally launching this now to better understand where to feather in our technology into that process and at what price point. So it could be as low as a few dollars per Holter, or it could be as high as $100 per Holter. We'll learn that as we go. But ultimately, we can either do reimbursement or we can do cash. I think we're going to end up seeing a combination of both in the US.
Will there be a specific reimbursement for it, or will the motivation factor be just the gains in efficiency and call it
Oh, no, no,
accuracy?
no. No, no. This would be, when we're cleared, it's a three
Yeah.
lead Holter. These charge codes have been around both in Canada and the US for decades. Yeah, we're not creating new charge codes. We just feather right into the existing ones. That's the beauty of it.
Okay. All right. And then you would get paid because that's on a per usage basis. So then you would get a cut of that per usage code.
Yep. So what would happen is they would take a license and let's say they did, I don't know, 500 Holters a month. And depending on the charge code for that, it could be 100, could be 300, could be more per. We would get a component of that price point. The key thing here, Martin, is the capacity and throughput increase. So if they are getting, in theory, we'll just use numbers for math, 100 per Holter, and we're able to double or triple the capacity from the single technician that's doing it, their core unit economics stay the same, while their revenue opportunity goes up 3x. So we are a significantly attractive solution in a pay for performance model type of healthcare like it is in the US. In Canada, it's a bit different. It's more cost conscious and budget friendly. So, can we do more Holters with the existing budget so that we can get more reimbursement, but it's not driven from a profit motive? I hope that makes sense. But in
All
both
right.
cases, we would fit into pre-existing charge codes.
What would the business model or revenue model look like in the non-regulated market?
That is my favorite market. For two reasons. It can be anything we want right now because we're at the top of the hill when it comes to ECG. But it will look something like this. May change a bit, but it'll rhyme with this. There will be a license fee to use and install the max yield neural net on your device or on your smartphone. And depending on the number of devices, that could be a very substantial license. We are speaking to a number of device manufacturers about this right now. The interesting part about all of this is when you see i360 and the quantum of data and output we are able to produce, it gets very interesting around how we can tier and price ourselves into the wellness market. It's not your same old, same old. Anybody in wearables knows PPGs. It's the light that you see on the watch, on your ring, maybe on your strap. Very limited in its utility, and by most cases is not accurate enough to do much more than basically measure your heart rate while you're sleeping and barely moving in bed. Everything else, little bit of a gamble on the efficacy and the quality of the data that you're getting presented. We solve that problem. The parties we talk to in the wearable space know it, they're excited about it, and we're now in discussions around term sheets to basically license the tech into them.
Can you comment on whether the company is currently in discussions with any tech providers and how those conversations are going?
Well, again, I want to be sensitive to, be careful how I say this. We are talking to, and it's not a few, it's a lot of, I'll call them large health tech companies. We are also talking to pretty much all the top brands that have wearables. It's no secret in the market that the new battleground will be ECG. And what I mean by that is when you get into this space in the wearable industry, this is the unregulated market. PPG, the light-based approach, is the predominant biomeasurement that is out there. Of the, call it 500 million wearable devices on the planet right now in use, 95 to 98% of them will use PPG at some level. When you use ECGs, the amount and quality of data that you can get over PPG is astronomical. All these wearable devices know it, and all of them are now moving through their product roadmaps to include ECG as part of their product offer. That, Martin, is where we fit, coming into those new releases. Interestingly enough, what we will disclose through the Q1 and into Q2 is a product we call Max Yield PPG. We brought it out a little bit earlier this year. We pulled it back because we were far too focused on ECG and our cardio yield product. But we have built the same type of neural net for PPG. This is something that we believe will have great interest with the existing incumbents in the wearable space. And we'll focus on that through Q1 and Q2 of next year. I believe we'll start to see some substantial gains there through Q3 and Q4. But it's my belief that both ECG and PPG will be the predominant footprint for wearables over the next 5 years. Just makes the most sense. So I'm excited about that. On the regulated, if you know them all, they're the big guys. They have ECG recording devices, implantables, all of that. We talk to them all. They're all interested in our signal technology.
As you move into your next phase of commercialization, how are you thinking about scaling? There's so many clinics, especially in the United States, going clinic by clinic sounds like it could be very slow and resource intensive. How are you going to
Yeah.
get that efficient scaling process in place?
Well, it's interesting. So in the US, I don't know, I wouldn't say this is quote a secret. I think it's just evolved this way. There is a substantial roll-up effort happening across all forms of healthcare clinics, cardiovascular just being one. So the key is to get up into the top of the pyramid and actually sell our solution from a, frankly, P&L point of view into these aggregators so that they can take cardio yield and push it into dozens, if not hundreds of clinics at a time. And so that is something that we are very focused on and we'll begin to pursue pretty actively in January because we've now got visibility to dates with cardio yield coming down the pipe on regulatory. In Canada, it's a little less. There aren't really, quote, aggregators. There are clinics that have, I'll call them a few tens, I'll call it. There's bigger groups like TELUS Health and others. We could talk with them. But the truth of it is, in Canada, I don't view that as our broad market. I'm happy to work in a couple of clinics across Canada. I think it's phenomenal what we can do here. But for scale, it's down in the US and working within that clinic model. And the best way to do that is to get into the apex predators that are rolling them up for efficiencies. They're rationalizing costs, they're rationalizing capability. We want to be one of the tools that help drive that for them.
Is there an opportunity to maybe partner with one of the incumbent equipment providers in the space so that you're sort of the default software that goes in with it and then leverage their sales and distribution platform?
Yeah, I mean, short answer is 100%, without a question. We speak to, I'll call it, I'll put it politely, several of these particular incumbents. What I was showing in one of those slides is there are dozens and dozens of ECG recording devices. 1 lead, 3 lead, 6, 12, believe it or not, 15, 18 lead devices. There's implantables that you put on your body. There are all new form factors of unregulated wearable devices, from shirts to, even, headphones now. They're finding things like PPG and heartbeat coming off the back of your pulse. Like, there's so many ways that you can get access to the ECG. It's all about the quality of that signal and what you can do with it. So absolutely, all of the folks that are incumbents, we would love them to license the tech, utilize not just max yield, but downstream the exploit, Insight 360 and or cardio yield. That's why we built the platform. That's why we are basically going into market like that.
Can you speak to your prior exits and successes and the AIML team's capital markets experience?
Yeah, I mean, well, everybody follows me. You can just Google me. But I built, sold pretty much 4 software companies, 2 in the public markets. A lot of people know me from my hologram businesses. Those are kind of fun. Last couple of years for me, it's been about finding really unique opportunities where I can take my experience, my network, my capital, and really help scale a business. I have to tell you, pardon the pun, when I got involved in AIML, the thing just grabbed my heart and I ran with it because I recognized early that neural nets themselves held the true promise of solving a humanity scale problem. In my prior companies, I've done that. My computer-based training company was all about eradicating computer literacy. That was a nice exit for me. I think it was around 2003. I built producttraining.com, exited that in '08. The hologram business, Next Tech. I mean, all these businesses have been about back of the napkins to foundational companies with big BHAGs, big, hairy, audacious goals. This one, I would have to say, is the culmination of a lot of that coming to the forefront. Never before have I been involved with the quality and caliber of team that just somewhat serendipitously come into our orbit. I believe because we're building a technology that literally can lever up and leverage access, democratize that ECG. We're being given access to some of the best minds, some of the best capability. The last thing I worry about is raising capital. Between my network and the network of our shareholders, I'm not worried about that. My track record speaks for itself. The team that I'm involved in speaks for itself. I'm super proud of it. So for me, it's about finding the best people, continuing to iterate the best product, and solving what I believe is one of humanity's biggest issues. And I know it sounds a bit boastful, but that little baby ECG, it's the fulcrum point where we can get the highest amount of leverage from the least amount of input. That's what I'm proud of, Martin. So yeah, no, I think we got a great team.
All right. Can you talk about your capital markets strategy? And you're clear you're running an efficient business and just the burn rate, let's say, of how that is operating.
Yeah, I mean, to be frank, we're, like every little Canadian small startup on the CSE. It's, I don't want to call it just-in-time financing, but you want to be very careful about how you raise your capital, how you spend it, when you spend it, and what you spend it on. From our perspective, I've tried to maintain a very low burn, if you can believe it, of the capital we've raised and the products, the people, and the outputs that we've been able to achieve. To be frank, we use a lot of AI to build our AI. I mean, it's a huge lever point, but you would never get close to being able to do what we've accomplished in 2025 in a past climate. You need the AI technologies and enablement tools. You need the best people. I happen to have a lot of them on speed dial. A lot of them work with us in our business, and they continue to attract their people. So I've never really been too afraid, Martin, about our spend, about our burn. I know as we go forward, any one of the deals that we talk about could turn our business cash flow positive. In fact, like all things, we'll likely start with chunky little couple hundred grand licenses that'll evolve into seven-figure licenses. There'll be pan deals across organizations. There'll be a hybrid model of pay as you go versus a minimum guarantee. All these things will come into focus through Q1 and Q2 for us as we begin to sell into the US market as we get closer to our regulatory grants. I'm very excited about that. So, no, Mar, I don't lay awake worrying about capital.
How is the unregulated marketplace seeing the strength and dependability of the neural net? Are there real world demonstrations, let's say, available on YouTube to view?
I don't know. We might have some on YouTube. We generally don't. I mean, there's some of these guys we work with. It's highly confidential, so we could never say, "Hey, here's what we validated. Here's what we found." But what I would propose is for those that are interested, let's just pay attention through Q1. We use a pretty cool device called MoveSense out of Finland. You can buy it right off their website. It is the device that we're working with down in Jamaica. That thing you just buy, put it on, record the ECG, and upload it to Insight 360. I mean, if you message us, I'm happy to set you up with a trial account and you can play with it. But it's like lightning in a bottle, And part of the reason, we worked with Adam Brown and his team at Cornerstone was to really tame what these reports can look like depending on my use. So if I'm a performance athlete and I'm getting all this access to the visibility of my heart, what type of reports should I be generating and looking at and tracking to let me know how I'm improving? If I've got a sleep concern or a recovery concern, what type of reports should I be looking at and what is it telling me? And then if I'm looking for weight loss, nutrition, metabolic, again, wear this single lead ECG, use i360, and let the reports tell you basically how you're progressing. So these will all come into focus, Martin, as we go through Q1. But I can tell you right now, just the early stuff we're working on, it's going to be better than anything that's out there.
When did you provide give your FDA submission, your 510K submission?
Well, there's a couple, right? So the first one went out, and we may have press released this. It might have been May. And then we've had a couple of subsequent ones that have gone in. So it's just an ongoing, and it's tough to answer that directly because there's max yield, there's cardio yield, and we got the equivalents here in Canada. And then down in Jamaica, we're taking a lot of the FDA packaged information, reformatting and putting it into Jamaica. So I don't want to say it's, we have a very large table that we measure this by. And so the earliest was in May, and then we're just continually putting these updates in. What I will say is we're in continual discussions with the FDA. How's that?
Okay, so you've
Yeah.
gotten some commentary back from the
Oh, no,
FDA
no,
on your
we're in
submission.
discussions. Yeah. Yeah, 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 yeah.
All right. We are at over an hour here. I believe we need to wrap things up. So, just the final thing is for the next, let's say, quarter or 2 quarters, what sort of milestones or expectations or types of news releases should viewers and investors expect to see coming over the wires? What kinds of things should we be expecting?
Well, what I would look for is more of the same. Pilot programs that are getting us into regulatory clinics. Wearables that are looking to do licensing deals with us. Interestingly, it's now not just wearables for, I'll call it humans. There's also, to put it politely, non-human. Sounds crazy, but it's the horses I mentioned, but dogs, cats, mice, etc. There's a variety of uses there that, again, these markets find us and pull us into them, which is unique and interesting. And these are not trivial markets. These are multi-billion dollar segments, virtually untapped for groups like ours. So you'll hear more of those. What I would pay attention to as well is some of the people we announced joining our team. the quality of their backgrounds, what they've done in the past, and where we believe they'll take us going into the future. That is another great early indicator to success. Patents are something that we will continue to announce, but we will do it in a very discretionary way because it is a foot race when it comes to AI and innovation. And so I need to balance the disclosure with where we're at because it's to protect our IP. And so I may not come out forcefully with a bunch of press releases on IP, but I'm happy to host webinars and meetings to discuss the technology at that level, just not within anything that would be, quote, too divulge, if you would. The other thing I would say is pay attention to our regulatory announcements. They are going to be forthcoming. And those things, Martin, in combination, will make for a fantastic Q1 and Q2.
With that, are there any final comments you want to make before we wrap it up here?
I do. And thank you for that. I will take 1 minute. I want to thank everybody for joining us today. I hope you feel that the progress we've made has been as what I would refer to as substantial as I believe it to be. I think we have a phenomenal team. I want to thank all of our shareholders for your patience, your opportunities. I know a number of you reach out to me offering, hey, can we help? Can we make introductions? Can we try? Please keep it coming. I love speaking with shareholders. You can see, given how fast we've grown, it's been a little challenging on my time, but as we add more bodies through Q1, my time will open up. The final thing I want to say is to everybody, have a happy and safe holiday. We want everybody back, fully recharged, working with us day in and day out. But now's the time to take a little bit off, be with the family, recharge, and let's crush it in 2026. So that's it, Martin. Thanks very much.
All right. With that, I thank you. I wish you a happy holiday and a great new year. And for everyone, yeah, a prosperous and healthy and well 2026. All the best and talk to you again soon.